Hey everybody, this is Jim at SP500chart.com using time-honored techniques to understand modern markets, featuring daily technical analysis videos of the S&P 500 index. Before we get into it, this is the video for the trading day, January 11th, 2012. It's about 4:30. I'm going to take a look at the S&P chart. Not a lot happened today, but I said I was going to do these on a daily basis, and even though nothing really changed today, I'm doing the video. But before we do it, got to remind you that the website and video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy that draws lines on charts. Okay, looking at a 15-minute chart that goes back all the way to the middle of December, and we're approaching now the middle of January. But the important feature on this chart that I think we need to look at is this channel that is developed between these two lines, this resistance line right here and this support line right here. And especially watch the support line. Folks, we've got 1, 2, 3, 4, 5 solid touches on this line. Matter of fact, let me just go ahead and put little circles on them to bring that point home. So that means this line has been tested numerous times. And when this line breaks, this move off the low 1200s probably over. Okay, so whenever this line happens to bust, that should signal a downward leg, wherever that might be. I mentioned in yesterday's video that we have a cluster of resistance that I'm going to stretch this out a little bit. This cluster of resistance is in the mid-13 teens, and one line is descending, and it is around it'll be around 13, 14. It's descending at a very slow rate. And then two other lines are ascending. And then finally we have a line up here that we'll talk about if we get there. But for right now, what I'm looking at, I'm looking for this line as a sell signal if it breaks. And I'm also looking for this area up in the 1314 to 1320 range. I would expect some resistance there. So again, right now as I speak, the S&P is actually over excuse me, the neckline from the large Head and Shoulders top right here. And I've drawn that very conservatively to create as high a line as possible so that we would know with more certainty when we're over that line. Okay? If we look at a 30-minute chart, check that. Let's do it on a 2-hour chart. The market is also right at about the same levels that it was at back in late October after coming off that early October low. And that level, yeah, it's almost exactly where we are. So I find that's kind of interesting too. But I think the operative pattern that we're looking at here is right here. And that is an inverse Head and Shoulders, and this would be a consolidation pattern that formed after coming off of this low right here. But I've mentioned it before, even though this pattern Now that we are clearly above that neckline, even though this pattern points to about 1380 as a target, I need to warn you that there's going to be some tough sledding in the low 1300s if this market has the legs to get there before that channel that we are currently in breaks. So the short-term health of the market, I think, can be determined by this channel. Okay? The longer-term health of the market, I think, will be determined by some of these other trend lines that are still a little ways over where we are right now. And when we start getting close to that, we'll go into a little bit more detail. So for right now, we had that gap up over this little consolidation area. And it sort of looks like we may be forming yet another little consolidation. So let's see what happens if this market continues to go sideways tomorrow. Let's see if it hits this red line and bounces up. Or, we've already come off that line. We could also just head on up and put on some positive gains tomorrow. If we look at a 5-minute chart, you can see I'm just kind of playing with some ideas here on what may have transpired over the past couple days. There really isn't any real clear pattern that I see, but getting over this little top line right here, I think that may be a pretty good sign as far as a little more strength in this market coming up. And the reason I say that is we had a run up to about 1296, and then we sold back down, had a run up to about 1293 and change, and then came back, and we were able to at least get back to that 1293, close to 1294 later in the day. So the day really was started off weak, but then tried to exhibit some strength all day long, closed essentially flat. So let's see if this is another consolidation, and if we come across here tomorrow and tag this line either tomorrow or on the 13th, let's see if we get a bounce. If we don't, then that line breaks, and that should tell us that this little party is likely over. So look, that's the S&P 500 update for January 11th. I appreciate you taking time out of your day to view it, and thank you for subscribing if you're a subscriber, and if you're not a subscriber, thank you for thinking about it. Go to sp500chart.com, see what it's all about. Thanks.